Hello everyone. Can everyone hear me at the back this time? Fantastic. My name is Arjun Harindranath. I'm here again from LatAm.tech, publication that focuses on Latin American ecosystems and startups. And we're here with SERGE ELKINER from Yellow Pepper.
Good morning, how are you?
I'm good, thank you. I wanted to start off with just a little bit of introduction into Yellow Pepper and what contributions they're making to digital banking.
Yes, so we're a fruit and vegetable distribution company. No, we don't do that. We work with banks and retailers, helping them to execute on their digital strategies. So that's at 30,000 feet, 30-second elevator speech. But basically what it means is most banks and retailers have a lot of legacy technologies that they've been running for many, many years, and that is hindering their ability to execute fast on this digital economy that's moving very fast around us, and to integrate and offer their consumer new experience that are much more seamless than going to the bank branch or the experience in retail that you can have these days. So our platform sits on their legacy platforms and enables them to build new experience for the consumers.
I know a lot of our readers at LatAm.tech are very interested in your presence coming into Latin America. Could you tell us a little bit about what experiences you've had in the last little while? I know you're pushing very sort of dominantly forward on the continent.
Yes, definitely. So it's a very interesting story on globalization, because I was born and raised in Brussels, Belgium, so that has nothing to do with Latin America. If you start with there, I studied at Boston University in Boston, and then I had the opportunity about 15 years ago to go for the first time in Latin America and realize that there was quite an unbelievable opportunity to develop new ecosystem based on the mobile. So when I arrived there, mobile penetration was very high, about 80%. Today it's of course above 100% in most of the country. And internet penetration was lower than 20%. In some countries like Bolivia, it was lower than 10%. So we decided, okay, there is a huge opportunity to bridge the gap, but also to leapfrog some of the technologies that the US or Europe has been going through as their normal evolution cycle. So we started in Ecuador, which is a beautiful small country in South America. We grew out of Ecuador into the Andean region. So first clients were in Colombia, then in Peru and Bolivia. And today we're present in 9 countries, and just announced last week that we're entering Brazil. So we're in Mexico, we're in Guatemala, in Costa Rica, Trinidad, Dominican Republic, Ecuador, Colombia, Bolivia, and now entering Brazil. So huge believer of the digital revolution in Latin America, fastest growing market in terms of smartphones in general. People are very receptive of new technology and want a lot more instant gratification in their life and seamless processes. If you've lived in Latin America, or if you're from Latin America, of course, you know that some of the processes, specifically in banking, are very tedious. And so we're very happy to help some of these banks challenge that, specifically the status quo, and help create new experiences that make the life of the consumer much easier.
Yeah, I wanted to just pick up on that point. I talked to a cloud computing startup last night, and they talked a lot about the challenges of digital banking, of traditional banking, and within Colombia, one of the biggest problems being the ability to transfer money from outside Latin America or outside of Colombia into Colombian banks. Is this one of the challenges that you're hoping to fix?
Yeah, definitely. So there is new roads that are being built by the giant financial institution of this world. So the Visa, the MasterCard, for full disclosure, Visa is an investor in our company. and we're very proud of that. But they're creating, Visa and MasterCard, Amex and others are creating new roads for you to be able to move money instantly, what they call fast fund, anywhere in the world, card to card. So I have a card here in the US, I can move the money anywhere in the world to another card. There is challenges in implementing that we're helping them solve. And the challenges are on the old infrastructure not being ready. That's one challenge that we just spoke about a few minutes ago. Regulation, and in Colombia there is a lot of regulation around anti-money laundering, KYC, counter-financial terrorism, all of these things that are very necessary in most of the economies where we work to make sure that you're not laundering money through all of these new schemes and new technology. But I think that the regulators are also forward-looking and very proactive in trying to enable new technology as fast as a regulator can move. So it's not easy to move regulation, but there is new regulation both in Mexico, in Colombia, in Peru, in Ecuador. There were new regulation, older regulation now, but they're changing that. Dominican Republic just launched like a couple of years back, brand new ACH. So we're helping them to try to execute and also to educate them on the fact that technology can enable these type of things. Technology is more secure than some of the things that they're using today, and that processes can be done through technology in a much better fashion than what's being done today.
I think that's kind of characteristic as well of a lot of these Latin American economies, that so much of it is dependent on this informal economy or this cash economy where people earn, people spend in cash. How do you see that transition taking place between this informal cash economy to digital banking? Do you think it'll be sort of seamless, or do you think it'll take a very long time?
So I think there's a couple of things that you need to put in context. I think first you need value in what you bring, right? So the consumer today, cash is very valuable. Why? Because I get paid in cash. I can buy anything in cash, right? As soon as I move my cash into electronic form, now I cannot buy everything and anything, because I go to a lot of merchants in those economies and I can't buy electronically speaking, right? Whether it's with my mobile phone or something like that. So already this is a problem, right? So infrastructure needs to change. Second is education, right? You had in a lot of these countries economical crisis, banking crisis, bank actually went bankrupt, people lost all of their money, so you have the mattress economy, right, where you save your money under your mattress. I think as the next generation comes into play, they're less affected by these, let's say, historical impact on their finance, and also they have, all millennials in a sense, have this need of instant gratification, right? So you need to be able to do things much faster than what you can do with cash. So if you bring this value of fast, if you bring the value of safety and security, and if you bring the ability to use that electronic money everywhere, then it's going to accelerate the conversion of cash to electronic. But it's a big ecosystem to build, and so there is a lot of moving pieces, and it's moving. Maybe it's not as fast as we all want, but you saw a couple of years back, I think 2 years ago, India, one day to another, half of the notes were not valuable anymore. That boosted, right, the digital economy. So you need like interventions still to make like this thing moving faster.
Do you imagine something like an intervention with the demonetization in India would work in Latin America?
So from what I've heard from regulators that I've been with, they don't like that specifically. So I don't see this type of very strong intervention happening soon. It would be probably the best, right? But I'm not sure it's going to happen. But they're very open. I mean, regulators that we've spoken to, and banking association that we've spoken to, retailers association, they all want to move forward. They all see the power of technology. They're also afraid of newcomers coming in, whether it's the Chinese company, whether it's the Amazons, whether it's threats that were not present in those markets. So they want to move. There is a sense of urgency that was not there 5 years ago.
You've just moved into Brazil. There's some very big news in Brazil. I'm wondering what your thoughts are going into a marketplace like Brazil. What are the big challenges?
So if there is any Brazilian here, they will tell you that Brazil is very different than anything else in Latin America, right? And it is different, right? It's a different country. It's the size of all of the other countries we have put together. It's also a different language, different mentality. But I also think that it's one of the fastest evolving country in Latin America, specifically in fintech and in the financial sector. They want to move fast. They're big. There's major volumes. There's new initiatives that are happening on e-commerce. Brazil is half of Latin America e-commerce by itself, if not more. So there is good challenges and there is tremendous opportunity, right? So for us, it was also a perfect time to come in. When we announced, we already have been working on that for a couple of months. It was pre-election. We didn't know yet who was going to win. Now, at least, I would say that, good or bad, somebody won. And so the political climate is a little bit more stable in the sense of like there is no more uncertainty. But I think the opportunity ahead in Brazil is phenomenal and just shows how you can lead the way in other countries in Latin America.
And when people think of Brazil and digital banking, the big name that people know of is Nubank. Do you get a sense of how Yellow Pepper will interact in the space that the Nubank is in right now?
So funny enough, Nubank, which is a newer bank, of course, just got, of course, an investment from Tencent, which is one of the two Chinese giants in our fintech space. But what's interesting is that Nubank was created already 4 or 5 years back on new technology. And even though they were created on new technology, they do have challenges. That technology may already be old in some aspects. So we are definitely hoping that we can help them accelerate faster some of their new developments.
Fantastic. And just one final question. You just had some good news from Visa recently. I wondered if you wanted to share it with the group.
A couple of things, but we've certified our platform to be a card-on-file tokenizer. What it means is that we are now able to secure the transaction online much better than what's done today. So if you look at it in Latin America, 65% of frauds happen online. So on the offline sector, you have chip and PIN or chip and signature in most of the countries. Therefore, there is a lot less fraud in the presential store type of transaction, and everything moved online. So what does card-on-file tokenization enables us to do is both on a Visa card or MasterCard card, we can take that card information, and what we present to the merchant is not the real card number. It's a token that changes constantly. That enables a transaction to be very secure because if somebody hacks into the transaction, takes that number, they can't do anything with it. So for a consumer perspective, it really gives them ease of mind and peace of mind that their transaction is not going to be hacked. My card was just hacked like 2 weeks ago. I had to replace it. It's always a pain when you have to go through that.
Actually, I'll just have one follow-up question before we finish up. And I'm interested in whether this is the big challenge of getting into Latin America, is to convince people of the safety and security of digital banking, and maybe this is a generational change that might occur.
So we ran a lot of focus group on that, and it's really a divided opinion. 50% of people believe that digital transactions are less safe than physical transaction, and 50% of people believe they're more safe than a physical transaction. There is definitely an education point here. It is 100% safer when you tokenize a transaction than any other transaction, physical or digital, if it's not tokenized. So security is a huge aspect of anything new. But if you look at the ecosystem as it evolves, if you look at what you're doing constantly today in your life, you're paying approximately 12 times with your credit card in a store, but you're probably paying 30 to 40 times with your credit card, either on e-commerce or in an app. Uber, Grubhub, like all of these things that are, they keep your card into the app, right? So there is nearly 3-to-1 opportunity to defraud you when so many apps keep your information. So really this tokenization aspect of the transaction and the security aspect has become critical. And we're working very hard, we're the bank and the networks to integrate that into the infrastructure and give the peace of mind to consumers.
Fantastic. SERGE ELKINER of Yellow Pepper, thank you for joining us.
Thank you so much for having me here.